Okay, welcome in everybody. It is a Tuesday, October 18th, 2022. Hope you're having a great day. It's a strange day in the market. We'll talk about that later, but I want to, first of all, go through something and show you the anatomy of a trade gone wrong. And this was a problem child, y'all. It was a problem child. And what happened was in the IRA account, we had a trade that went terribly wrong. And it was our 11121st trade. So let me just kind of walk through and show how we defended this trade. So we initially received a credit on a 111 that we did right over here. And we did it right here. So we put this trade on 8/22. And on 8/22, we thought that was good, 60 days to go, right? Everything was fine. But the problem is, we got 7 days left in the trade, I think. We got tested on our short put before all this bullish nonsense started. We got tested on our naked put. So what we did is we closed that trade. We closed the naked put, and we had to close it at a humongous debit. So, I mean, it looked bad, didn't it? We got a credit on the trade, 155, but then we had to close the naked put for $998.16. So what did we do? Well, in that same 7-day expiration, we put on a trade. So it was a 112, but it was a 3 lot. So we had 3 naked puts. Right? We closed 3 naked puts. That's what we did because it was a 333 actually. So we rolled those down in the same expiration and basically converted the trade to a 112. And we did that roll for a little bit of a debit, right? We had a debit of 998 and we rolled it down for about break even for 988. And now I took on more risk because I sold twice the amount of puts that we originally had, right? But I rolled them down where I thought they were really, really safe. And we received a credit for that roll of 998.68. Everybody play along in the same expiration, 7 days to go. That was Friday when we did that. Last night, with this move up, I was like, you know what? Let me go ahead and take those put debit spreads up because I was afraid if we went up too much that we would go outside the profit 10, right? And we didn't want to do that because those had built up a nice little profit 10. So the we got a credit on those put debit spreads of $684.93, which was sweet. Closed those last night. Yeah, and I want to make sure everybody sees the trade because I didn't post this one in the room. Let's see. Closed it last night. Here we go. 46.25 credit. Let's make sure we got our numbers right. And we received a credit of 684.93. Let's go back to the page. 684.93. So yesterday, those 6 naked puts that I sold for 988, I closed them yesterday. I was like, should I close them? And I didn't. And then later on that day, I closed them. Let me show you where I closed them for. Let's see what we closed those. Make sure everybody sees the order. I don't want to hide anything from you. Here it is, 6. Right? We closed them. Create duplicate order. We received a debit of 109.32. So in a trade that went horribly wrong, where our strike got tested, we had total debits of 1107.48. We had total credits of 1829.13. And we turned that trade, ladies and gentlemen, into a $721.65 winner. Now, this is only the second problem child that we've had since March. We had a second problem child, right, the 11120th, that we didn't do nearly as well on. But at this point, we were like, let's just scratch this trade. So in this particular trade, we ended up with a profit of $48.33. Now, what this has done for me is given me tremendous confidence, right? Because I lack confidence. I lack confidence. So it's given me tremendous confidence to go, hey man, if one of our naked components of our 111 and 112 trades gets tested, yeah, big stinking deal. You know what we're going to do? We're going to roll him out, baby. We're going to roll him out. Now, we can roll it down into the same expiration. And I could have maybe rolled it 3 into 5 puts, 3 puts into 5, or 3 into 4, or 3 into 6, or 3 to whatever to get it saved. Now, you say, well, Bobby, you looked up, market all of a sudden turned bullish. Okay, I got you. So let's say the market had continued going down and had tested my 6 naked puts. What could I have done then? Well, theoretically, I could have rolled it down into 12 puts or 10 puts or 9 puts in the same expiration. But probably what I would have done at that point is rolled it out in time, right? From 4 days to maybe 11 days or 18 days. And rolled it out in time to give me a little bit more time. And so as long as you and I, kind of come up with something over here where we can kind of figure out our credits and our debits, but then we can make a really nice profit on a trade gone wrong. How to profit on a trade gone wrong. And I got to give it for Ed. It was, the one that said, hey, roll it, Bobby. And I was like, yeah, I'm not big on rolling. But after doing this, I've got, maybe I'm a roller now. Maybe this is how I do it. Kind of like this because I was able to turn something from a loser into a winner. Now, exactly, John, you brought up a really, really good reason. I could not have done this if my buying power was, at 90 or 100%, right? You can't roll down and take on additional risk and use additional buying power. So John just figured out that's another reason to keep your buying power below your max limit so that you and I have enough buying power to be able to do this. Now, John, here's the interesting thing that we found on rolling out in time, right? Because I'm not a big roller. So if you're here to figure out the ins and outs of rolling, I'm really not your guy because up until now, I've been against it. I've been like, look, baby, take your loss and go on to something else. But I kind of see the merits of it. Maybe I'm converted. So what we discovered, John, and y'all may have known this because a lot of y'all are smarter than I am when it comes to trading, particularly. Maybe you're not as smart as I am when it comes to ordering a great meal at Applebee's, which I have mastered. But when it comes to trading, a lot of y'all are more advanced than me. So what we found is that rolling out in time actually helped our metrics. It helped our Greeks, and it didn't take any additional buying power, which was cool, right? So it takes additional buying power to roll down in the same expiration, but to roll out in time didn't take any extra buying power at all. So we're experimenting, we're learning, we're all learning together. So does anyone have any questions on how to defend a trade gone wrong? I mean, it ought to make you feel really good. Now, maybe there's times when, this thing is going to be, instead of 10 lines long, maybe this is going to be 50 lines long. And maybe we have to, go left and right, left and right, left and right, roll it out for 6 months and keep up with our debits and credits. Now, this looks really like intimidating for some of y'all because you're going, oh my God, this is accounting 101. I don't want to do it. Well, the cool thing is I've already built this for you in your spreadsheet. So if you've got the new spreadsheet, you've got the problem child. How do you get the new spreadsheet? All you got to do is be a member of the Muscadine Mafia, and everybody in Muscadine Mafia is trying it out. I think we've got the people with Max working it from getting it on Google Sheets and then downloading it. So I think everybody's fine. So if you haven't got it and you're a member of Muscadine Mafia, let me know and I'll get it to you. Now, I will be rolling this out to Ninja Nerds and Hello Ladies as well. But I thought, hey, we'll let the Muscadine Mafia try it out first, see how they like it. But I like this little thing, so you get a trade that goes against you, put him in timeout, and he's a problem child, and then we got to focus on him. But other than that, we're really just focusing on the metrics of the trade or the portfolio. Now, I also said, I don't even know if we have to use this, right? I hate to get you so excited on this. I don't even know if we have to use this because if we're going to be true portfolio managers and what we're trying to turn to, maybe this is not necessary. But if you want to manage your problem children like this is great. All right, any questions about this particular trade? Isn't that cool? I mean, you know, you're sitting there going, man, this trade's losing, it's going against me, and we turned it into the $721 winner. How does Daddy do? Huh? How does Daddy do? Now, is anybody finding anything strange about your accounts today? You're looking at your Netlick and you're going, something's not right. Who's saying something? Somebody's got audio ready to go. Go ahead and say it. Nobody? Anybody wonder what's going on with your accounts? So I was looking at my Netlick and I go, wow, that's crazy, man. Market's up, which I've got positive deltas, but my account is down big. What is going on? So when we look at the market today, here's kind of one thing that we see, right? We see that the market went up big time. But now in this little pullback, we see a little pullback, volatility is increasing. Volatility is increasing, particularly on this pullback. Not necessarily was it increasing here, but as we pull back here, volatility is increasing. And so you and I sell options, and so we are negative Vega, right? And so when Vega increases, you'll see your profits and losses go down. Has anybody noticed that, or am I the only one that noticed, oh, I'm getting killed today with positive deltas? And it's because of the increase in volatility. So let's look at the VIX real quick. VIX, high. Hold on, nobody look. Close your eyes. Close your eyes. There we go. So let's see what our VIX is doing today. The VIX is, well, it says it's down a little bit. But it was up a little bit ago. Let's look at the whole little chart of VIX. See what the VIX is doing. Yeah, see how it kind of, there we go. VIX was down, VIX was down, VIX was down. And it says it's, you know, about down, but look, it's kind of a green candle, right? So VIX is still hanging out really, really high at 31.31. So when you kind of go, why is this account down on the day? Well, this one is flat deltas, but it does have negative Vega, right? And the volatility is really kind of messing with me today. All right, so let's record everything. Let's see how everything's doing. Now, I've started something new, and on this account, I'm actually not recording the trades, but I am recording the, I'm going to start recording the profit and loss and option buying power and the Greeks on it. So let's see if I can find this account. So probably spreadsheets, we probably this, Tastyworks spreadsheet. All right, and I just kind of want to see what this thing looks like. All right, so here, let's do this. This one is 10, 18, 24. No, 24, 22. Let's see what this count is at. No battery. If my battery is hanging there long enough for me to get this. Let's see. Come on, recognize my face. There you go. So we are at, oh man, I gotta hide. Hold on a second. Settings and privacy mode. Beth, can you do something with that dog? Huh? There we go. 34. 703. 34. We're down, right? $1,034 on the day. Let's go to Greeks and ratios. Let's just see what it is. Let me turn that back on. Not privacy. So we can look at it. So the deltas are -7 and theta's 127. -7, 127. -7. Same as yesterday. Theta is 127. It's interesting to see what it is, right? 0.37. And I've transferred everything over to the new spreadsheet too. It's VIX 31, is that what I remember? Right. So our max theta could be 0.4. We're close to it. Buying power usage on this is 7742.63. 7742.63. I think that's the same thing as yesterday. Oh. It makes me wonder if that, 22% buying power. Max deltas could be that. I've got negative deltas. Theta looks good. It's at the top of range. Look at that, y'all. Top range, but look at our deltas. Why is our delta so low? Because I've been letting those put debit spreads go into expiration, right? It keeps delta under control a lot. And look at that, we're using 22% buying power. Isn't that beautiful? That's pretty. All right, let's look at the other accounts. Here we go. So let's go to don't do that. Let's do this one. See how bad volatility is hitting us today. So we're getting a move in our direction, but volatility's popping us in the face. That's okay. So this we anticipate to be down, maybe a good bit. Let's see. This one is at 24, and boy, that's big time. 890.60. Big, y'all. $1,500. Yeah. What happened there? All right, let's get our Greeks and ratio from that account. That's the Crimson account. Here we go. Take these off. All right, so 28.78 on the delta. 28.78. Market goes up, our delta should go down a little bit. Our theta is 98.61. How did that increase so much? 98.61. Wow, look at there, y'all. It's like we've maxed out in theta. Isn't that cool? 31, so at 0.40 says we're okay, but we're at the top range. Buying power, see what that went to, 95.14. Now remember, we're experimenting with these new metrics. We've got new metrics in. So well, there we're kind of close there, right? But the deltas are really sweet. Look at the deltas. The deltas really sweet. Deltas looking really, really good. All right, let's go to the other account. Play this one. Here. I'll get our here. So see how bad we're doing on the net lead. Over here, 10, 18, 22. I'm not putting a lot of stock in it because I think it's a big vol move. But this one is 99,942.17. 99,942.17. Little drop, right? Up, down $2,500. Unbelievable. Ooh. Look at that. All right, Greeks and ratios. See what our deltas are. So we're delta's 83.47. Market goes up, deltas go down. So our theta is 187.91. .19, and our buying power usage is 22,220. 22,220. All right, so let's start with this one first. So deltas look really good, right? God, that looks like a lot of deltas I could have in that account. Oh, that seems like a lot. I don't think I'd ever want to get that high, right? So deltas look good. The theta looks really, really good. And our buying power usage is 22.23. So it looks really, really good. I mean, I don't, you look at it and you go, wow, I don't really need to do anything, right? Nothing is really out of line at all. So the market's up today. Market up. Did I make a new trade? No. Now, remember in the past, we would talk about, hey, closing things at 65% winners. I don't think that that's necessary anymore, especially when my deltas are fine. I mean, you go back and you say, okay, I'm not making a trade. Why? Because the market's up. But my theta is fine. My buying power is fine. I mean, everything looks really, really good. So I don't think there's anything to do here. Now, certainly we can go and look at the individual trades. Let's just look, see what we got going over here. See what we got going on. So we got a naked put that we're doing, separate from everything else. We got a 11126 that's up a little bit today. That's up $107 on the whole trade. We got a 66% winner, a 62% winner, a 52% winner, a 273% winner. 13 days to go. See what else we got. 258% winner, -29 plus 188 plus 50. I mean, everything was really, really good, right? Naked put 6. Let me move that. We closed him yesterday. So I don't think anything here goes, oh, Bob, you really need to do something. Nothing's really telling me or speaking out to me that I got to do anything. Now, here's the way I manage the other account and the way that we kind of said we're going to do this one, right? Is rather than looking at the groupings, you start looking at, take the groups off, you start looking at the days on the trade, right? So you look at the days and you go, okay, I got some that are 13 days out. So if there were something that I needed to manage, if I needed to reduce my deltas, then I can start closing these out here. I wouldn't even look at these. I wouldn't even look at these 31 days. Anything that I would look at would be here for 13 days. So if I need to start peeling stuff off, here's what I do. So what trades in the groups are in the 13-day range? Let's just look at those. Hold on a second. Let's find them, right? Not that. So we got a 11126. Let's look at the 11126. Analyze macros. I said macros. So hide simulations. And 11126. Okay. So we're out of the profit tent. Well, are we? Let's see. Where's my profit? This. I have to know. Here we are. We're in the profit tent, right? $126. We got 13 days to go. I mean, thinking we might have a pullback with 13 days to go. I think that's fine. What else we have here? Now, Ed had to close. Ed, did you close those yesterday? Ed had some that were about to escape his little tent, right? So he was like, I think I'm going to close those. I don't know if Ed's listening or not, but I'm not sure if he closed those or not.
Hey, Bobby. Yeah, I told myself I'd wait till this morning. I was more underwater. I basically had to stop at $500 on that put debit spread.
Mhm.
And it got down to like 550. And then the market started pulling back. And as it pulled back, I have 13 days to go. This is a 37.20, 37.70 put debit spread. So as the market pulled back like to the 37.20 something level,
Mhm.
I actually sold a 13-day 34.50 single naked put for $10. So this is the third naked put I've put under this put debit spread since I've had it. I think I've had it since September 13th. So it's an oldie, but this is just an example of the flexibility that we have with some of these trades. Like I could have just let it sit as a naked put. And, I'm thinking about it. I'm analyzing. I'm like, I'm going to capture $10 a premium. This thing's either going to end up in the tent and I'll keep the premium, or it'll exit the tent to the right. I'll go back to my minimum, which is 0. It's a put debit spread. And then I'll capture the $10 of the ES premium, which is $500. So I'm kind of thinking, unless it plunges through the 34.50 level in the next 13 days, I could make $2,000 on the put debit spread. Now another $500 on the naked put. So hope that's not too many words.
No,
I wanted to let you know what I did.
Explain that strategy, Ed, where you're using, the put debit spread for the benefit of several naked puts, right? That's what you're doing.
It is. I have on these stretched 111 for no credit. I have a couple of badass 111s, 112s for no credit. And those things over time just, they mature, they work. The naked puts tend to decrease in value. And at some point, the put debit spread is paid for. You can take it off, whatever. I just did one, I think it was yesterday. Yeah, yesterday. A December 111 stretch for a quarter point. And I'm just going to let that thing crank for a while, let it mature, let that naked put decline in value. And when it does decline in value enough and we get a good solid pullback, I'll take that thing off at a few bucks and I'll either roll in one higher naked put or two not naked puts and make it a 1-1-2. Or I'll leave it as a 1-1-1. In other words, I'm recycling the put debit spread over and over. Sometimes I don't do it at all. I mean, like if we get in a bad situation and there's no credit to sell, or the market rallies so hard, your put debit spread is way, way, way under the market. You really can't sell a naked put underneath that and collect any premium worth collecting versus the margin used. I'd rather just put on a fresh trade with that margin power, buying power. So is that kind of explaining what you want?
Yeah, I think so.
To hear?
And I think the big thing is, Ken says the strategy sounds like a Christmas tree. Great strategies. Yeah.
Well, I've mentioned this before. When I was talking to the portfolio margin people at Ameritrade, one of the guys was a floor broker. He goes, "Oh yeah, we used to call these a Christmas tree, and then we just called them a tree." And he goes, "They come in every so often. We post them up on the big board." So I just want to throw out there, this trade has been around for a long, 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 long time, as probably has every trade. So yeah, you could look at it as a tree. The exchange calls it a Christmas tree. So,
Now, y'all, here's one, we're getting down into the finer parts of this trade. This one's the 1-1-1-18. Everybody see this? It's up $114. If we stay here, right, we're going to, make $272. But this is one that's kind of, it's getting to where we might be out of there. So, we're up 113 on the trade right now. If we go up, we're going to be, it's not that bad, right? It's not a big loss on it, but would you take this trade off? 13 days to go, up $114. If you go up 5%, you're still up 89. And this is still building up, right? To have a nice little area here to the left. So what you could do is on a trade like this, watch. So see, it's up 206%, right? So my naked put is up 34%, right? So this is what we're about to start talking about. We're about to start talking about, okay, we can manage these things separately. Now this, I'm scared, I think, and this is where Ed said, I'm afraid we're going to scare the children, right? I'm afraid the children are going to go, wait a minute, Bobby, I don't understand why the sudden deviation. Let's look at this 1-1-1-19. See how that looks. 1-1-1-19. Okay, so we're farther up there, $98. Still building a profit hump to the downside. I expect us to have a pullback. Is it going to happen in the next 13 days? I don't know. But then on the 1-1-1-19, look at this one, 1-1-1-19 with 13 days. This naked put, y'all, is up 61%. It's up $63. This naked put is up $37. Why would I not close this and leave my put debit spread on this 1-1-1-19? So this is where we're going to go in. We're going to do a little bit finer analysis. So, and the reason I'm thinking about closing anything now, first of all, I don't have to. I'm at the top level on theta. I'm fine on buying power. I'm at the top level on buying power. And my deltas are insignificant. So if I want to release some theta, right, and bring this down a little bit, and I want to reduce a little buying power, then what I could do is close this naked put that has already financed the purchase of a free debit spread. And that's exactly what I'm going to do. Everybody follow me. Everybody follow. I'm going to try to go in at the 8, right? So square debit. See if we can get out of that for 8. Cancel replace. Go 8.25. Just work it and get it filled. Yeah, there we go. Well, 8.25. Okay, so what did we just do by doing that? Well, we should have improved our our stuff. Let's look at it. So now our deltas are 6.55. Is this right? 33 on the theta. God, I didn't mean to lead it that much. Look at well, that made a big difference. Something made a big difference. Is this the right spreadsheet? No, let's see. Get the right spreadsheet. Okay, so 28 went down to 6. Our theta went down from 98.61 to, is that right? That is strange, y'all. That one little put made that much of a difference in my buying power. Is that amazing? It's amazing if it did. And our buying power went down to, I cut my buying power in half by cutting that one naked put out. Seems strange, but I'll take it. But does everybody see that? So that actually left a free put debit spread. So now let's look at that trade, right? The 111, which one was it? 18? Let's go back to the 18. So 111, gotta put them back in my groups. I think we did that one in the 111.19. There it is, 111.19. We took that risk off, right? So analyze tab now, 111.19 looks like this. Boom. So Big Daddy, here's where we are now, right? That trade's up $32. It could lose $50, but look at that. But it's a free put debit spread. I've already made enough money from that naked component that we have a free hedge on, y'all. That could give us on a 5% pullback or less, right? 2 or 3% pullback, could give us a maximum profit of about $200. Yeah.
I'm in my car, so I can't see what DTE you have left on this put debit spread. How many days left?
13 days.
Okay. Thank you.
Stacy said the short 3,500 put was probably in hot water at one point and now is profitable. Would you take it off as well now? Is that, what did I just take off? You talking about this other one? Yeah, 3,500.
The 18th, 111 Yes, that one.
Yeah. Now here's the thing. I don't think I would do it now. I had no idea that taking off that one naked component here, that 3440, would have such a strong effect on my grades. Let's say, unless I'm getting a bad read here, let's look at it one more time. So our new is 6, 33, and 5. That made a tremendous difference in my account. Now I'm sitting there thinking, do I have enough theta? If I was at 33.41, can you believe that? 33.41. Okay, I'm fine. I'm at 0.13. I was sitting there thinking, God, do I need to put on a new trade? God, that was great. So now do y'all see what we're doing? Hey, Sweet Bobby is at the top level of theta. Maybe I need to take a little risk. It still says green. I'm at the top level on buying power. Okay, that looks bad. But what do we do to change it? I took off a little risk, which reduced my theta, and it reduced my buying power. This is the new strategy, y'all. This is how we got to look at it. It's a little more complicated, but it's a little more simple at the same time. It's simply complex. Stacy, do you disagree with that? I would leave the 3,500 on now, right, based on my new metrics. Because my new metrics, I cut my buying power usage in half, and I'm barely at the lower edge of theta. Might as well leave that on, right? I don't want to reduce my theta even further.
And you have the protection of that put debit spread that you didn't take off.
Yeah, and I've got the protection of that put debit spread.
So if that 3,500 gets challenged, yeah, if it gets challenged, your put debit spread's going to end up maxing out.
God, isn't this great, y'all? I mean, are y'all excited like I am? I hope y'all are. I just like these little.
I'd like to say I am excited, and you know, you keep saying we were saying we're going to scare the children. I'm one of the scared children on this. Like, I do not have my head around legging into these trades. The motivation initially of buying the put debit spread on up days and selling naked puts on down days was to try to improve your cost basis on the overall tranche.
Mm-hmm.
And as we've seen in chat, some people are very good at it. Some people are very good at it. But we've seen in the chat rooms, and I myself have not experienced great success with this. And So I blew it off. And that's kind of when I started using this 1-1-1 stretched, which is a 1-1-1 for no credit. So at least I'm paying for the put debit spread. I am putting on one naked put with it. And then when the market pulls back, then I add another naked put either at that strike or maybe even a lower strike, depending on what's going on. What I want to add to that is you almost have to put some kind of time limit, like I'm going to fill the naked put today or by tomorrow at the close. Because if you go 2, 3, 4 days and you do not fill that thing and the market does not cooperate by pulling back, you're almost forced to put on a naked put much higher than you'd want to, or just leave the naked put on as itself. So this whole manage the portfolio by the Greeks, I love it. And that's where I've been going. It's where I'm continuing to go. But I've been working hard at this mental concept. And again, I'm sure some of your listeners are laughing. Oh, Ed's still trying. I got this down. I think the majority of us are still getting this down. And it's a growth moment. So if you have just where I've been coming from over the last few months, I could not do the split naked put and the naked, the split put debit spread and the naked put. I just did not do it well. And it was too much stress when I had to wait to fill it in. Now, as I said this morning, and I haven't grown a lot because I've had people say, well, why don't you just buy the put on up days and sell all the naked puts on down days? Well, you know, I hate to use the word scared, but I'm not comfortable with that either. If I'm not comfortable buying a put debit spread on an up day, I don't see myself being comfortable laying out a lot more money and just buying a put on an up day as a trade initiator. So again, by scaring the children, again, it's an adjustment process. What is what we mean by that? And it's, you have to, in my mind, I have to think a lot about this to get the concept down, and I'm working hard toward it, and I'm not there yet. I think I'm to the point now where I will put on a put debit spread because I see where my portfolio can handle it, and not even worry about the quote cost unquote of it because the portfolio can handle it. And then I'll layer in a naked put if and when the time comes. And again, this morning, I've had this naked put that Bobby was asking me about that we talked about last night. I've had it on since September 13th. It's been reused twice with naked puts under it. Again, I just looked at it. I'm like, I'm going to lose all this money. So I want to put a $500 stop on it because that's what it cost me to get in. I'm going to do a break even on it at that point. And then it dawned on me, well, hold the phone. This thing matures in 13 days. I'm going to sell a put for $10. And I looked out there and I grabbed the 34.50. And now my situation is, okay, and I know I'm a little repeating myself, but it might help people to understand. If the market crashes to the downside, this 37.70, 37.20, 50 wide is going to be worth $2,000 at closing net to me. And I just pulled in $500 more on this naked put that's 10% below the market, basically, in 13 days. Can we get there? Yeah, we can get there day after tomorrow. We can get there next Monday. I don't know. But I will have recycled 3 naked puts under this. So I'm pretty sure if I look at that thing over the course of its life, it's a profitable trade. And at that point, I have a fully maxed out put debit spread and a naked put that if it's challenges at 34.50 level, I'll roll that thing out into 2 naked puts and collect enough to do another put debit spread and just create a brand new 1-1-2 with it.
Yeah, I love it. And like John says, we're all still learning and getting comfortable in, at least most of us. Oh, we're all learning. I just like this though. It's good that now I can go, oh, I need an adjustment. What can I do? Well, let's look at the trades. What's coming up in the next expiration that I could take off that would give me buying power relief and would give me theta relief, you know, if I'm at the upper level. Now, if I was not at the upper level, I would not have closed that. Isn't that cool? But now I can close it, get margin relief, get, you know, buying power relief, get theta relief, get everything. And you look at your account now and you go, okay, that's the only adjustment necessary. I closed the naked put, took the risk off. Apparently, Thinkorswim loves what I did because they rewarded me. They took away a lot of my theta, but I'm still above my minimum theta threshold. So, y'all, if you will sleep on this, you're going to go, oh my gosh, This is powerful. So now we're really going to portfolio management and away from trade management. All right, guys, I gotta run. Yeah, go ahead, Ed.
Yeah, I just want to say again, be patient. If you feel like you're a deer in the headlights right now, you have company. Do not feel like you're alone. I don't have all this down yet, and I'm working hard at it. So it takes time. It's like learning a new language or something. You can't just learn it all at once. You have to, and all this is an evolutionary process. These are higher level trading. If this is beyond your capability and you're still new putting on the 112s, please continue just doing the 112s and ignore this put debit spread, naked put splitting, portfolio analyzing stuff, because you're not there yet, but you will be in time. It might be weeks or it might be months. In the meantime, don't go into paralysis mode and do nothing. Continue building out your 111 or 112 portfolio according to whatever rules you have, watching your metrics, and roll with that. And of course, my thing is always at the beginning, go slow, let those mature, and then slowly roll them in on top to have better foundation protection from the put debit spread. So stay the course. If you're deer in the headlights, don't get afraid and run away. Just stay the course, and you will get to these levels in time. And hopefully in time, by then, Bobby will have mastered this a lot better. I'll have a better understanding. We'll be talking more. We'll be explaining more. Maybe we can even have special sessions where this is discussed.
Yeah.
Because these are very high level things. These are the things that I wanted to do months ago when I applied for the mentorship. This was what I wanted to get to in time. And I feel myself bumping into it now, but I'm not there yet. So I just want to let you guys know it is not easy unless somehow this is intuitive to you. But it's not easy at all. So hang in there and be patient.
Oh, yeah.
Thank
And
you.
listen, guys, we don't want to scare anyone off. So here's the deal. If you want to continue managing it by the trade, do that. The trade still has a positive expectancy. You can continue doing that. So no one freak out that, oh my God, what are we doing? We're closing parts of it. So Dale says, how do you record all the adjustments on the spreadsheet? So Dale, here's what I recommend doing is that we're going to start recording our trades on the NP and spreads page so that we'll record the naked put separately from the put debit spreads. So it'll be easy to do. Now, in the meantime, all I'm going to do is on the one that I closed today, I'm going to go back over here, right? It was the 111. Oh, wrong spreadsheet. It was the 111 over here. What I'll do is I will put a note right out at the 1119. I'll go out here and I'll put a note that I closed the naked put at whatever. So that when in 13 days or before, when I manage the put debit spread, I'll mesh them together so that so I won't record the profits that I made today on that on the spreadsheet. I'll just put a note out on the side that says, hey man, I have closed this. I'll probably even make this another nice little purple color or something to let me know, this is a special trade now. I have closed the naked component of it. So this is special. It's special. So
and that's exactly what I do as well, Bobby. I make all these little notes to the right of the spreadsheet, all the debits and credits, because sometimes I'll take a put debit spread, it's all, and I'm entering it in the sheet where you enter the put debit spreads and the naked put separately. Mm-hmm. And then I make those orange. I make them orange. And that means they're in place, so to speak, and they need a special look every now and then. Not a special look, but they're just being, they're metamorphosizing into another thing. So it's like a tip that I have something to do. Just like I'll color my stretched 111s because I can layer in a second naked put and make that a 112 anytime I want to. I'll color those differently just to kind of highlight them as, oh, the market's down. What do I want to do? Oh, these are the trades I need to tweak on.
Yeah, and everybody, you'll get a little system together. So I don't want you to feel that you're out there all alone. We're going to go through this together, okay? So this is high level stuff, but we're going to all go through it together, and you'll be fine. I just wanted to show something. I don't think that you see my net leg now has gone back. Remember, it was weird a while ago. I think the change in my theta and my buying power was more of a fluke rather than me making that one trade. Okay, so I remember I was sitting there going, man, it must be because vol is up. that my accounts are down so big. It's like I was getting bad marks or something. Now things look a little bit better, right? I mean, there's no reason my account should have been down $2,500, you know, in the other account. You know, when I'm getting a move in my direction and vol may be up just a little bit. So I think I'm getting better marks now. Let's see if we're getting it in the other one too. I just want everybody to be aware of that.
One more chime in from me. Tasty Works has been screwed up since at least last Thursday.
Okay. Yeah, remember my net lick was what, 99,000? Now I'm at 103. Yeah, so yeah, Ken said the same thing happened. So, you know, I was sitting there looking at that like, and that one trade that I took off a while ago should not have made that big a difference. That's why I'm sitting there going, are you kidding me? I took off a 13-day to expiration, you know, naked put, and it made this difference. I was skeptical of it. And my skepticism is paying off. You know, you trade these things long enough and you kind of feel like something's off, right? Something's off. So my buying power probably wasn't in jeopardy anyway, but that's fine. I'm still good. I think I'm still fine. All right, guys, great session today. This is awesome. This is high level stuff. If you're new, please hang in there with us. I think it's going to really make a difference in your trading. Y'all have a good one.